Hey everyone, and welcome back to the channel. Today, we're talking about the AI revolution and why it's not just a buzzword, but a trillion-dollar opportunity that's already reshaping our world. Companies are integrating artificial intelligence into every facet of their operations at an incredible pace. Research from PwC suggests this mass adoption could lead to a market size of over $15 trillion by 2030. If you're looking to capitalize on this seismic shift, you've got to understand where the real value lies in companies that are already well established, leading the charge, and poised for significant long-term growth. First up, let's talk about Nvidia. These guys are truly the backbone of the AI revolution. Their graphics processing units, or GPUs, power pretty much all the AI infrastructure build-out you see today. They've achieved an astonishing 90% market share in the data center GPU space. This dominance isn't just about their powerful hardware. Their CUDA software platform, which they launched 2 decades ago, has become the industry standard for AI developers, making it easy to program their GPUs. Demand for Nvidia's chips is soaring, driven by cloud computing giants pouring money into AI infrastructure, large tech companies and AI startups creating new foundational AI models, and even entire countries making massive investments to avoid falling behind in the AI race. Nvidia's upcoming Blackwell platform is expected to further boost their top-line growth, and their focus on sovereign AI, a country's ability to develop and deploy AI, is yielding lucrative deals like those recently announced with Saudi Arabia and Germany. Wall Street remains highly bullish on Nvidia, with analysts forecasting further upside, citing its strong fundamentals, robust demand for its AI chips, continuous innovation, and solid execution. Bank of America, for instance, considers Nvidia a top sector pick, recognizing its multi-year lead in performance, pipeline, incumbency, scale, and developer support. Next, we have Taiwan Semiconductor Manufacturing, often referred to as TSMC. While Nvidia designs the chips, TSMC is the undisputed global leader that actually manufactures them for the world's top designers, including Nvidia itself. They produce an estimated 90% of the world's AI semiconductors, making them absolutely indispensable to the entire industry. TSMC's technological lead in advanced chip manufacturing, specifically their 5nm and 3nm processes, is crucial, and management has recently reiterated strong demand for both. The smaller the nanometer number, the more transistors you can pack onto a chip, which significantly improves performance and power efficiency. TSMC is the best in the world at making these advanced chips at scale, giving them strong pricing power. Their AI-related revenue is projected to double this year compared to last year and is expected to grow at a 45% compound annual growth rate over the next 5 years. Overall revenue is projected to rise at nearly a 20% CAGR. Despite recent share price gains, TSMC stock's price-to-earnings ratio is still below the broader S&P 500, suggesting there's plenty of room for continued growth. The company also works closely with its largest customers to build out capacity in lockstep with their demand, ensuring they remain a clear winner in the AI infrastructure build-out. Moving on to software and cloud services, Microsoft is a true powerhouse in the AI space. Their strategic investments in OpenAI, the creator of ChatGPT, gave them early access to one of the most advanced AI chatbots on the market. They've rapidly integrated ChatGPT into nearly everything, from their Microsoft 365 suite of productivity tools to their GitHub Copilot coding assistant. This integration has been pivotal in keeping Microsoft relevant in a rapidly shifting tech landscape and allowing them to benefit immensely from AI's growth. Their Azure cloud computing platform, the second largest public cloud provider, has seen a 35% jump in cloud services sales in their fiscal third quarter. Microsoft is demonstrating its commitment to staying ahead, spending a staggering $80 billion in cloud infrastructure this fiscal year alone. They are also a major player in AI agents, software programs designed to perform business tasks autonomously, offering services like Azure AI Foundry Agent Service for developers to build specialized agents for complex business tasks. While the stock has seen significant gains, it's still considered a strong long-term consideration, despite competition from other cloud giants like Amazon and Alphabet. Then there's Broadcom, another vital hardware provider for AI data centers. They supply semiconductors, software, and networking products crucial for managing immense AI workloads. Their custom AI silicon, including application-specific integrated circuits, or ASICs, and extreme processing units, or XPUs, is experiencing robust demand, with AI semiconductor revenue growing 46% year-over-year last quarter, contributing 30% to the company's total total revenue. Their networking products specifically for AI saw even higher growth, surging 170% year over year. This is driven by new technologies like their Tomahawk 6 Ethernet switch, which delivers an incredible 102.4 terabits of data capacity, essential for high-performance AI training. Broadcom also has a massive long-term opportunity in helping customers design custom AI chips, with their top 3 customers expected to deploy 1 million AI chip clusters each by 2027, representing a potential $60 to $90 billion opportunity. Their acquisition of VMware further strengthens their software offerings, helping customers build hybrid and multi-cloud environments, ensuring they efficiently manage workloads across public clouds and their own data centers. And finally, don't overlook Advanced Micro Devices, or AMD. After a temporary dip, AMD is showing strong momentum in AI and beyond, benefiting from the perception that they are Nvidia's strongest alternative in the data center GPU market. In the first quarter, AMD reported impressive revenue growth of 36% to $7.44 billion, with their data center business jumping a significant 57%. This growth is primarily driven by their EPYC CPU and Instinct GPU chips. Their client segment, which focuses on PCs, also saw strong 68% growth, indicating they're gaining market share from rivals like Intel. AMD is aggressively expanding its position in AI through strategic acquisitions, bringing in expertise in areas like rack-scale solutions and acquiring AI startups. With a broad range of components, strong growth momentum, and recent strategic moves, AMD looks poised for a significant recovery and long-term success in the chip industry. It currently trades at a forward PE of 33 based on adjusted EPS estimates.
Beyond these core hardware and infrastructure providers, other companies are making significant strides. Take Oracle, for instance. This company's stock recently surged to new highs, driven by accelerating growth in its cloud business. Oracle is a leader in offering applications and database services for enterprises, and its comprehensive suite of integrated services is fueling strong demand for its cloud and AI offerings. Their cloud revenue grew 27% year over year last quarter and is projected to accelerate to over 40% in fiscal 2026. Revenue from cloud infrastructure services specifically grew 52% over the year-ago quarter. Oracle is also involved in the ambitious Stargate project with OpenAI, which aims to build $500 billion worth of AI infrastructure in the US over the next 4 years, indicating attractive growth prospects. They offer a unique competitive advantage by allowing companies to use their own data with popular AI large language models while maintaining crucial security. Another intriguing player is Palantir Technologies. This data analytics company is considered one of the hottest AI stocks on Wall Street. Palantir's AI platform, AIP, is bolstering its business, driving rapid revenue growth across both its government and commercial segments. In Q1 2025, revenue increased by 39% year over year to $884 million, with adjusted earnings per share jumping 62%. Palantir's management believes they are in the middle of a tectonic shift in software adoption, especially in the US. Instead of developing AI models, Palantir focuses on the application and workflow layers, essentially creating an AI operating system. Their AIP can gather data from a wide array of sources and organize it into an ontology, linking data to real-world counterparts, allowing organizations to solve complex problems across various industries, from monitoring sepsis in hospitals to streamlining insurance underwriting. While it trades at a high valuation, some analysts believe investors should look at the big picture due to Palantir's exposure to a massive AI opportunity. The AI landscape is incredibly dynamic, but these companies, Nvidia, Taiwan Semiconductor Manufacturing, Microsoft, Broadcom, Advanced Micro Devices, Oracle, and Palantir Technologies have established strong footholds and are directly benefiting from the massive investments pouring into this transformative technology. Understanding their unique roles and advantages can help you identify compelling opportunities for your long-term portfolio. All right, that wraps up our look at some of the top AI stocks on the market right now. If you found this information helpful and valuable for your investing journey, please hit that like button, subscribe to the channel for more in-depth content, and let me know in the comments which AI stocks you're watching. We'll catch you in the next video.